categories. First is direct taxes and second is indirect taxes. Direct taxes are taxes which are imposed on person and are paid to the government by taxpayer himself. For example, income tax. If there is liability of income tax on any person, he has to pay it directly to the government. Indirect taxes on the other hand are imposed on goods and services and are paid indirectly to the government via third person. For example, service tax. When you go and dine out in restaurant, you pay service tax which is included in the bill to the owner of the restaurant. That restaurant owner pays service tax portion to the government. In this way, you pay the taxes to the government via third person, so it is an indirect tax. In our country, indirect taxes are levied by central government as well as state government. Some major indirect taxes levied by central government are excise duty. It is charged on goods produced or manufactured in India. Service tax. It is charged on provision of services. Central sales tax or CST. It is charged on interstate sale of goods, that is when goods are sold from one state to another. Custom duty. It is levied on imports and exports of the goods. Some major indirect taxes levied by state government are value added tax or VAT. It is charged when goods are sold within the state. Entertainment tax. It is imposed on various forms of entertainment, example on movie tickets. Luxury tax. It is imposed on luxury hotel rooms. Octroi or entry tax. Some state government levy octroi when goods enters the state. This was a quick overview of major indirect taxes imposed by center and state. If you want to have a clear understanding of present tax system, I would suggest you to watch my previous video in which I have explained everything in detail. I have provided the link in the description box below. Now let's understand what is GST. As the name suggests, it is an indirect tax levied on goods and services. It is clear that GST is an indirect tax and it is not going to have any impact on rates or structure of direct taxes, which mean income tax rates and its levy will remain same. The reason it will be a game changer once implemented is because GST will replace major indirect taxes that are levied by center and state. What does it mean? Taxes such as excise duty, service tax, VAT, luxury tax, entertainment tax will all be replaced by goods and services tax. There will be two parts of GST. First is central GST or CGST and second is state GST or SGST. All central level indirect taxes except custom duty will be replaced by CGST and state level indirect taxes will be replaced by SGST. Now let's talk about some benefits of GST. Economists say the new system could add at least 2% to India's GDP and that should help keep India's economy moving. Some major benefits of GST are: it will replace all major indirect taxes. We have already discussed GST is going to replace all major indirect taxes imposed by state and center. It will remove cascading effect. Cascading effect is a situation where tax is imposed on previously charged taxes. In simple words, it means tax on tax. A product on which excise duty has been charged can also be liable to VAT. Let's say a manufacturer produces certain item for ₹100. He charges excise duty at 12% and sells it to shopkeeper for ₹112. That shopkeeper sells the same item to the consumer after charging VAT at the rate of 12.5%. In this case, VAT charged by dealer is ₹14. This ₹14 has two components. One is ₹12.50, which is on the cost of the goods, and second is 1.50, which is charged on excise duty. In this case, VAT is charged on excise duty component also, and consumer has to bear this additional burden. This is called cascading effect. GST will remove cascading effect as there will be only a single tax applicable. GST will reduce flow of black money in the country. Black money refers to funds on which taxes have not been paid. There are persons who understate income by not reporting each and every transaction. By doing this, they save indirect taxes and more importantly are able to furnish under-reporting of their incomes. GST is single tax on supply of goods and services right from manufacturer to the consumer. Credits of input tax at each stage will be available in subsequent stage of value addition. To get the credit of previously paid taxes, everyone will insist upon getting the invoice for the transaction. GST will have a paper trail which can be accessed by the income tax department. Users of PAN and Aadhaar will be required to file GST returns. This will help the income tax department to track transactions. In my view, this is the beginning of new era where corruption will gradually subside. One India, one market. GST will facilitate Make in India by making One India. There are dozens of taxes that prevent India from becoming a common market. Under GST, a single tax will be imposed all over the country on production, sales and services, turning India into a common market. Seamless flow of goods across nation. On many occasions, you might have seen a long line of trucks on both sides of state's border. These rows of trucks, sometimes running into miles, have to pay entry tax or octroi. Every time goods are moved from one state to another, taxes are paid at border. These taxes are collected by individual states. Imagine a situation where trucks has to pass multiple states. According to Road Ministry study, a typical truck spends nearly 16% of time at checkposts or at toll plazas in queuing up to pay tax only to pass through a state. There is also a central sales tax or CST for interstate movement of goods. Consignor has to show various documents relating to CST at the state border. Some manufacturers do not supply goods in other states because of CST and octroi. GST will result in easier transportation of goods from one state to another by replacing CST and octroi. GST will reduce transportation and logistic costs to the great extent. Ease of doing business. Apart from having a common market, there will be a lot of ease of doing business in India. At present, a businessman has to get registered with various tax authorities, maintain many papers and file different tax returns to different tax authorities. After the implementation of GST, there will be a single registration, single return and less paperwork. The businessman will be able to put his time and energy into doing business rather than complying with various tax laws. Now let's come to most important part of GST, which is rate of GST. Government has recently announced the rates of new GST regime. There will be 4 main tax slabs ranging from 5% to 28% under goods and services tax. These 4 rates are 5%, 12%, 18% and 28%. According to government, essential items including food items will be taxed at 0%. The lowest 5% rate would be for commonly used items, while 12% and 18% will be 2 standard rates. The highest 28% will be applicable on luxury items. Now let's have a look how it is going to impact a common man. In the current non-GST regime, indirect taxes on goods are 27 to 32% of the cost of goods in general and about 15% of cost of services. However, once GST comes into effect, the cost of goods is likely to come down while the cost of services will rise. But overall tax burden on the consumer is likely to reduce in general. There are certain items on which GST will not be applicable. For example, alcohol, tobacco, petroleum products, tax on electricity bills are some